Hi everyone, so I thought I'd jump straight into a screen record here, and I'm inside my demo account of my Interactive Brokers, the Interactive Brokers investment game that we're sort of playing here on my Discord channel. I have invested, it's actually a little under a year ago now. We all have $1 million to play with, and anyway, what I'm doing today is I'm showing how to sell a call option. Now, the reason why we would sell a call option in anything is if we have a position in something, so you already have to have the position, and then you are looking to exit that position. If you sort of want to exit at a certain price, let's say what I'm going to do today, I'm going to look at Prosus, which is PRX, and I want to sell this, say, I have this in my personal portfolio. Let's say I want to sell some of these at $70 or €70 a share. What I do is I search here in Interactive Brokers for the symbol. It gives me this screen here. I then go to the options chain. And from here is where we're going to look at calls and puts. Now, we're going to specifically look at calls today and specifically selling a call. Now, I've got videos on my channel about selling calls, but essentially what this is you've already made up your mind to sell the investment. You just want to sell it at a certain price. You're not going to accept anything less. You want to sell it at, say, let's say when this reaches $70, you would happily sell. So what you can do is you can make money while you wait. So if you're already going to make that decision, you can get some money on the side. And if it does go above 70 by whatever expiration date you choose, well, it would be exactly the same as if you sold it for €70 a share, but you got paid, and we're going to figure out how much you would get paid to wait for that particular outcome. The downside of this is if it goes up to 80 or 90, well, you still have to sell it at $70. But if you've already made your decision up and you're willing to, that's what you're going to do anyway, this is a good way to exit positions. It's a good way to make a little bit extra on this, to exit a position that you're already going to exit. So let me go through how I would do it exactly. What I would do is I would look at the variations in when the 14 days, 49 days, 77 days. I could look at all of them, but I know roughly they're going to be best around this area, just from experience. I'll show you some examples as we go, but what I'm doing in particular is I'm going to calculate the estimated return over these 14 days. So what I'm going to do first is we're going to do the calculation here for, I want to sell it at €70 a share. I'm looking at the call side here, and I can, in 14 days, looks like I can get a call somewhere between 38 cents and 46 cents. Let's put it a little bit on the lower side. Let's say we're going to get it closer to 40 cents. Now, you have to sell in parcels of 100 shares at a time. So you have to have a minimum of 100 shares. That's at this price, $7,000 worth of Prosus stock. Now, in 14 days, you would make $40, right? Divide that by the 7,000, which you could potentially have to sell, and it turns into a 0.57% return. So 0.57% return, and it's in 14 days. And if I annualize that here in my optionmarketmentor.com calculator, it tells me I'd get about, looks like about 16%. So 16% is my annualized return for that variation. Now let's go out to 49 days out. And for 49 days out, we're looking at somewhere between 171 and 180. Let's call it 175, somewhere in the middle. So $1.75 times 100 divide by 7,000, because that's how many we'd have to sell. So we get 2.5% in 49 days. So 49 days, 2.5%. Now we've got to try to beat this 16% number. Let's see what happens. And we do. So this is a better annualized return at 0.75 for 49 days. Now let's push it out to 77 days and see whether that's even better again. So we're looking at somewhere between 263 and 274. Let's call it, I don't know, 266 or something like that, somewhere in the middle, on a little bit on the lower side. 266 times 100 divide by 7,000 gives me 3.8% after 77 days. 3.8%, 77 days. So we've got to try to beat 20%. And we don't quite. We're just starting to go down a little bit. So it looks like after 49 days, at around that 1.75 mark is ideal. So we want to sell a call, and this is how you would do it. I press the sell button, sell side over here. Ignore this stuff here. This is like Interactive Brokers giving you a, I don't know, giving you some more information about what you're actually trying to do here. I'm just going to press the order button at the top. Now, where it says C117, right? We don't want anywhere near 117. We wanted like 175. Now, that was just the last time a trade happened, was at 117. That would have been yesterday. The market's only just opened, so there hasn't been a trade yet go through for this particular option. So we want to do a sell. So we're a call side, we're selling. Prosus, we're going to have just one, which would be 100 shares. I'm going to put a limit, and I'm going to put my limit price as 175 and good till cancelled. I'm going to press preview to see what that looks like. And that's correct. I'm going to get $175 euro deposited into my account immediately. It's going to cost me $1.50 euro to do this. And it's just telling me about how much money's in my account, but this is just a demo, a trading account. So this is not even real. So not real money here. I'm just going to press override and transmit. The following order, sell, Prosus, call. The price exceeds a percentage constraint of 3%. Are you sure you want to submit this order? I normally press accept in these situations. They're just trying to make sure you know what you're doing. So I press accept. And it looks like it actually got filled immediately. So I go into the trades. I go into orders and trades. And ignore this one here, the one that's got cancelled, because I was just doing a test run just before to cancel it. But one got filled. So this is it. It got filled at 178, which was even better. So that's ideal. So I sold one call option at $1.78, and that's going to be on July 21st. So on July 21st, if the price is well above 70 euro a share, I will have to sell 100 Prosus shares. I don't have a choice. And that's how you sell a call option. Now I've already pocketed the $178. And if I went back to my portfolio, and what I should have done was at the start of this, I should have monitored how much euro I had in my cash report. And of course, like always, the Interactive Brokers link is in my description just below. Oh, here we go. I got 176.50. Yep, that's right, because that's 178 minus the $1.50. Minus the $1.50, which is perfect. So it worked. That's how you sell a call option. Now I just sit back and wait. I already collected the money. And if it sells at 70, great. If it doesn't, that's fine. I can just reload this thing and do it all again. All right. I hope that helped. That's how you sell a call option. That's how you make some money while you're waiting to sell a particular position. It doesn't work for every stock that you own, but some of the big ones, some of the more liquid companies, that's how you do it. And okay, that's enough for today. If you have any questions about call options, let me know and I'll leave you to it.